Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Clint Brewer. Good morning, Clint. I'm glad everybody could be with us this morning on uh, a thinking morning for me. I'm thinking about a lot of different things, but really what's top of mind is the move. The comments out of Ray Dalio yesterday, Robert Rubin, who was the Secretary of the Treasury when the market was crashing in the 80s and into the 90s, and I'll never forget. I was a young trader at the time, and Robert Rubin walked down the steps of the Treasury building when the market. I mean, we would never have anything like that ever happen now because it's. I hate to say it, it's a rigged computer game. But back then it wasn't, and futures were limit down, and there was no trading. Believe it or not, that's how crazy it got. And he walked down the steps of the Treasury, in front of the Treasury, to a podium, and he said, "Buy America." So I remember that, and that saved the market. We're in a computer rig. I think Jane Street is the entire stock market. Whatever their algo says today is whatever is going to happen. But anyway, the point being, I'm looking at gold, and gold has exploded. It's up like $50 every single day. It's up 1.5%, 2%. I mean, that's a move. Like if the stock market ever had a down move like that, they'd be casting dead bodies. It would be really bad. But really, the takeaway is under, as you say, under the hood. Okay, there's massive inflation. This is an inflation trade. It was talked about yesterday by Robert Rubin. It was talked yesterday very much so about Ray Dalio, saying this is 70 styles inflation. We're not getting data because the government's closed. But I mean, listen, on everything that I have, and I'll ask you after, everything that I have has exploded up in price, whether it be, air conditioning pricing in your house, to buying food or going to Starbucks. I mean, my tea that I drink every morning right here is doubled in price in 1 year, doubled for a tea bag. So, I mean, I think that the real under the hood is that inflation is really kicking up. People are fearful. I think Clint is off. But anyway, people are fearful of uh, of 70 style type inflation right now. And it's um, it's really, really difficult to figure out, other than that, why gold would be going up in this fashion. Listen, it could be CTAs, it could be, other people, but to have a move like this where it just blew through 4,000 like it wasn't even there. It's up 55% on the year. And our markets are so equity markets. When I say our market, that's really where we live, is in, US equities. We trade everything, but US equities is our main focus. But it's the most complacent environment. And it was funny, I read a stat. Yesterday was the first down day in the month of October. It's not that deep into October. And the late um, um, month, September, was up too. So there was eight straight up days, then a down day, and then like 8 up days. So there's been like really one down day in the last 15 trading days. We're up again this morning. I'm actually a little bit surprised about that. You know, they they've had him on the ropes twice interday. Once my computer shut down on Friday when we had that whoosh sell off of like 40 handles, which isn't even a lot. Um, but the days of you know down 2%, 3%, then trading off, running up 1%, because of this computer algorithm rig, those days don't happen. They can't happen because the computer can't control it. If they buy slowly 50 basis points, 30 basis points, 20 basis points every single day, the algo can control that. But once we start moving, especially down, they can't provide liquidity and buy stocks. So a couple of times, a little bit yesterday and a little bit on Friday, um, we saw, downward action where almost the computer shut off. So, and then yesterday at like 2:30, after we had a big sell off in Nasdaq, big meaning like almost 1%, which isn't big. So the computer like shut off for the last 2 hours of trading. There was really a $20 range in Q, Nasdaq futures and Q pricing. There was a literal no range shut computer type of thing. And I had dinner last night with five guys that I know from my community that are, hey Clint, uh, I was just discussing, um, on the little blip down moves, it's like the computer shuts off. Like on Friday, my actual system from ICE, where I get my quoting and trading apparatus from, shut down when we went down 50 handles. The whole screen went black. Okay. So when there is going to be selling in some far century from today, I'm only kidding. Whenever that is, I believe that we're going to have system problems. I believe that you're never going to be able to handle the flow that's going to be 10 times or 5 times as big as what it is now. And you've seen it, like E-mini volume on a slow day barely cracks a million. And we're usually up on all those days when we crack a million. Okay. Just crack a million. Okay. And then when we're a little bit busier, it does 1.3. But whenever we go down, okay, whenever we did in April, we were doing 2.7 million. Okay. So the volume was more than double what it was when we go up. And that was not a lot compared to what we potentially can see. And you're going to see a 5 million contract day in E-minis and maybe 50 million index options, zero DTEs trading, which is probably 5 times what we have. And I discussed a little bit yesterday about it. Like a lot of people are trading options that don't have capital to take in any of the options that they're buying. So if they're buying Apple options, they can't buy a $250 stock. They can't even buy a $50 stock. So we're going to run into that too. The fact that people are going to basically maybe be forced delivery of long stock by being short puts. And what's going to happen when that goes on? It's going to be an Armageddon type of scenario because nobody has the capital. There's millions of guys that I know, not millions, but there's a lot of guys that I know that have strategies. They're not even in our business and they just sell naked puts and they tell me, "Hey, I'm selling naked puts in Apple. If Apple gets to 230, I don't mind owning it." Um, and the bottom line is they don't have the money to own it. And in April, a buddy of mine who trades this strategy, who's done very well, obviously, because we've been in a bull market, in April had to take a mortgage or a loan, I don't know if it was on his house or whatever, to carry the positions that he had in the stocks because he didn't have the money to take delivery of 8 stocks at the same time. And I think that that's the fire that we're playing with when we're playing with these options on a daily basis and then on stocks on a weekly basis. And I don't know if you have any insight into this. They're going to start listing the big equities on a daily basis. So it's going to get a little crazy out there. Um, you know, again, markets are, firm this morning, but it's strange that they are. Gold is up. It's coming in a little, but it's up 50. Crude oil is up $1. I don't know if it's in sympathy to that or if there's any news. I don't see it. Bonds are flipping around the same place. They're probably, going to stay between 410 and, 415 ish. And then I was, thinking about this, and it's really it's interesting. Like, I'm looking at Nvidia, and Nvidia, okay, in the MSCI, the World Index, if you break down the component, I saw this last night. Nvidia itself, as part of our weighting, has a bigger weighting than the entire Japanese stock market. Okay. That's 4.7%, and Nvidia is 5.3. How is that even possible? I mean, it's it's a froth bubble that we have never seen. I mean, come on.
I saw a stat just the other day. So since ChatGPT was released in November of 2022, 41 AI related stocks have accounted for over 70% of the S&P 500's return. Um, and the other 459 stocks in the index comprise the rest. I mean, that's, we're to what you mentioned, and with the MSCI, to all the different, we're hitting records in concentration, right? I mean, top 10. If you own the S&P 500, you have 40% of your money in 10 stocks. Like, this was the big thing during the internet bubble. It's like you think you were diversified across this big basket of stocks, but really you're overexposed to a select few, and that's even worse in the Nasdaq. I mean, if you're holding the Qs right here, you basically have 50. I think it's 52% of your money right now is in 10 stocks, and guess what? The other holdings in the Qs are pulling back. They've been pulling back pretty quickly. So the last time we were writing about this, I think it was late last week. Like 40% of the stocks in the Nasdaq, or actually, no, it's the other way. 60% of the stocks in the NASDAQ aren't even above their 50-day moving average. So only 40% are above their 50-day moving average in the NASDAQ. So you've seen kind of this broadening deterioration under the hood. And, at some point, it'll matter for investors. You saw the same conditions emerge in the internet bubble, but, it's as always, it's tough to time exactly when that bubble will burst. But I thought, I'm sorry I cut out there earlier. I know you're starting to talk about inflation and gold and rate value and stuff, but I don't know if you saw around, talk about the bubble bursting. I don't know if you saw some of the Oracle news and some of the XAI news that was out overnight.
Yeah, I mean, the same fake partnership deals of if they do whatever, absolutely. But I don't know why they're coming one after another, and like it's just there's no commitment there. But it's it is what it is. To me, I'm looking at AMD. Everybody's saying how bullish it is, but to me, I would say that's highly dilutive. Okay, you're giving up 10% ownership of your company, okay, for really not a lot, right? And it's just based on pricing that you're going to give them just free warrants to turn into stock. It just doesn't seem like the greatest play. And then my bigger question is, there are so many chip players, right? And there are more entering the market. Like, Microsoft's trying to make their own chip. Like, why can't Microsoft make their own chips? Like, it seems pretty easy to do. Again, I don't know. Maybe, because like Larry Ellison is saying they can't make money. They're not making money. They're paying too much for the chips.
Yes,
So
let's go
why
there.
would
Let's go there for just a second. So that report. So Oracle, down 2.5% yesterday. What a collapse right there. But everyone's freaking out. But the report that drove that was that Oracle's their AI cloud business they're sitting on $100 million in losses for the most recent quarter, from leasing Nvidia's their new Blackwell chips. So they said that despite that unit generating around 900 million in revenues, they have a tiny gross profit, and they're running at a $100 million loss, which I think kind of goes back to what you're talking about recently, and that's how are these guys actually making money from this stuff?
No, and they're locked into paying really high prices, right? And Nvidia, dictates the terms of where they're buying the chips. And my thought is, why do you want to lock in with Nvidia or AMD? Wouldn't you want to price it out, see where things go, see who the new players are, not be so in bed in an industry where, you know, things listen, I've traded, semiconductor chips for ever and ever and ever, and Micron was the darling of darlings, and that stock went from 180 to 2. Okay.
Well,
A commoditized business. And this is a should be a commoditized business based on supply and demand. And it just seems like they're locked in to buying, and they don't want to disappoint the mothership, by not, by not doing, what they're supposed to do. And it just seems to me that, again, I think I used this word yesterday. This is hocus pocus. And, we talked about a minute ago the weightings of these names, which are, Mag 7 is like 40% of the Q or more. Okay. And,
yeah,
and, but what happens is, like we did it yesterday on the podcast, we'll find two stocks up, six stocks down, seven stocks down, five stocks down. And that's the Jane Street, that's the computer algo rigged model. That's what they do. Okay.
yeah.
Because you
I don't know.
can't, I'm sorry, Clint.
Well, I was just going to say, so I just want to touch on, why can't someone else just come out and make these chips really quick? I think the commoditized end of the semiconductor supply chain, that's the stuff going into like your car or your refrigerator. I think they do have a stranglehold on stuff that's, they need to run AI applications that's going into data centers. And look, there's two companies in the world able to do that. I mean, Nvidia is designing them, and Taiwan Semiconductor is making them. I don't know. I don't think that's an easy thing to replace necessarily, or replicate, which is why, but that creates another issue. That's why they cost so much, and they cost too much, that you have these reports coming out like Oracle running $100 million loss because, these things are so expensive, but they really don't really have anywhere else to go. And that, some of these headlines I was going through last night. Here's a couple I found interesting. So so here's another deal coming out. So Elon Musk and his XAI. So Nvidia, this came out last night. Nvidia is participating in XAI's. They're doing another fundraising round, and I guess Nvidia is going to invest up to 20 billion. And they're basically giving XAI 20 billion to help fund the purchase of Nvidia's own chips to build out their Memphis data center facility. And one of the things that caught my eye, one, is that there's debt that's part of this deal, and the debt's being collateralized by the chips themselves. And two, there's this how this structure is going to work is that there's a special purpose vehicle that's going to purchase the NVIDIA chips, and then XAI is going to turn around and lease them for 5 years, which is kind of like what Oracle's running into that issue right now in terms of leasing, renting these chips, and they can't make any money on them. So I don't think there are many chip alternatives to NVIDIA, which is driving crazy prices. But like, there's nothing, there's no money to be made that, or not enough right now that it's greater than the cost of buying and running these things.
But isn't there, if China's not buying one Nvidia chip, they're running more AI than us. So I don't know where they're running it out of, and they're not buying any Nvidia chips. So there's got to be other people doing this. And again, I don't know, but I know 100% certain that Microsoft and these other companies are trying to develop their own chips. Why do they, it's not like a secret formula. I mean, all you have to do is hire a couple of guys that worked in there or whatever, unless they have crazy non-competes or
Yeah.
you know, but I'm
There's
just
only really one company sophisticated enough right now to make them, and that's Taiwan Semiconductor, right? I mean, it ultimately comes back through them and their ability to even have the capacity to do that for them. So you know, maybe that happens, but I think there's, probably some bottlenecks in those companies being able to do that at scale. But what on these deals, just one other thing that caught my eye this morning. This was a headline coming across as we were literally going on air, and it was Nvidia's CEO. Someone asked him how OpenAI. So they announced this huge deal with OpenAI. They're asking the Nvidia CEO Jensen, how OpenAI will fund the deal with Nvidia, and he said OpenAI doesn't have the money yet and will raise it through revenues and equity or debt. So I mean, there's so many pie in the sky figures just being thrown around and assumptions being made. It's ridiculous.
Right, but my question is, why are there five of the same type of deals coming out in a week and a half? Like, that's what I don't understand. Like, it's just okay. Who's the other AI company that's big? They'll announce a deal. Like, I don't. What is there? Only two big AI companies in the world? That's what it seems like to me. And I don't know how that's gonna, drill down to so many chips. Like, isn't there AI right now? Like, I'm not understanding what do they expect to ramp up? And listen, I'm not saying in 5 years or 10 years things couldn't look different, but certainly not in the next year. It's funny. I had to listen to the flying car for every single day and the flying taxi, and they're gonna have this kind of car and that kind of car, and that never materialized. Now we're starting to see a little bit, but it's 5, 7 years out, from where they were talking about it. And you know, this is way out, way, way out there. And the market is way, way ahead of itself. And, Nvidia to me seems a little bit like Bitcoin in a way for a trade. Like, Bitcoin is trading at 120-ish thousand, right? It's over fully valued. It's had a crazy move. The money was made early days, right? And Bitcoin, it's funny, like Bitcoin goes up or down a couple of percent. Yesterday it was down 4. So it was a little bit of an outlier, but it's become a regular asset that moves like 50 bips, 150 bips. But really, the players that got rich in Bitcoin got rich when it was 1,000, 2,000, 4,000, 7,000. To double from here is an insane move, and is doubling really what these guys want. And I'll tell you this. So, I have an entity, an ETF that I run. We have about $20 million. Just starting out. Hopefully, have a couple of 100 million. Probably won't ever be the size of my hedge fund, but we're hoping to get more assets. It's a great vehicle. It's a protection vehicle for the downside, etc. Okay, but I have real, money in that, not $0. And my firms are asking me, hey, you can't take delivery of these options. You don't have enough money. And I'm like, you're right. I'm never going to take delivery. But I'm sort of sophisticated because I've been doing this a while. I know how to maneuver positions. But I know we touched a little earlier on this. People are locked in here to massive positions relative to their size. Like, I can't sell 20,000 common Nvidia. Who's buying all this stock is what I don't understand. I know what it is. It's a bunch of guys in a chat room buying, half shares and 10 shares. And that one chat room adds up to $1 billion hedge fund. So that's what we have. But really, that's what's buying the market. This is not, these stocks are very difficult to be investable for the long term at these levels after not having a correction for 3 years, etc. But the algorithm is out there, and the algorithm continues to buy, and the trade's sort of been the same every single day for 3 months. Market goes up a little, or very rarely down, and then the next night we open a little lower, and then we explode up all night, and then we come in higher. It's unbelievable. Like, yesterday we had some really decent downside action, especially in Nasdaq, and it literally stopped. The computer shut off. The Nasdaq didn't have a $20 range all afternoon. I don't know if you were looking at markets, but it did not move at all. It just sat. So I don't know what that is. Hopefully we're getting closer to trading, meaning like two-way action, markets that are a little bit more uncertain. Again, we need, two down day. I don't know the last time the S&P closed down twice in a row. It's got to be months, right? Um, So we'll see if we get that today. It's not looking like that'll happen, but overall, the money is in gold right now. The market is out there. It is actually an amazing move, and I mean, people are just looking at it like, hey, it's gold, but there's got to be underlining meaning to
Yeah,
this.
I wanted to ask you about that. So I want to ask you about gold. And before I get there, you're asking who's buying Nvidia, who's where are they getting the money to buy these stocks at these levels? And I was just looking at FINRA margin debt. Margin debt rose 4% almost to a new record high in August, just over $1 trillion. So that's, I guess they're borrowing it from the bank. That's where they're in their broker. That's where they're getting the money from. But
And wait a
back to
second, time out. If we saw that when we were trading, this market would be down limit. Okay, not a little limit, but the bottom line is, for whatever reason, these Jane Street guys or whatever. I hate picking on Jane Street. I just think hang on one second. I just think they're the culprit of the major culprit. And you saw articles about them in India rigging the markets and whatever. The bottom line is these guys, for whatever reason, don't want to drop the market. Like, the funny thing is, Jane Street could make $10 billion today if they sold the market off. 10 billion in a day. And the funny thing is, if you read this story about Rob Granieri, who's the original founder and the main guy there, he's like a recluse multi-billionaire. They're up 10 billion in like the last 5 months, and they're making money at record rates. Like, one down day at 4%, that guy will make $10 billion in one day, without a doubt, easily.
what's better for them? What's better for them? Volatility and seeing the swings, or to draw in more option flow? Because I mean, you see, I mean, this is where the payment for order flow comes in. I mean, you see the call option volumes just hitting record after record after record. And if they're paying for that order flow and they're making money on the bid ask spread, like, I don't. To me, if they're propping up the market, that tells me they're making more money by sucking in, all these retail
Oh
traders
yeah.
into.
Right, but then I agree. And now they have the base because they've made 8 billion or 10 billion. They could do whatever. But my thought is, I mean, there's no way. There's just no way. Even my friends I had dinner with last night, who all own stocks, are laughing at the market. They're literally laughing. They're like, "This is crazy. I don't even understand. I bought this. I bought that." And they've tripled their money, doubled their money. And yes, it'll continue to go on until it doesn't. But I'm just surprised, like you're reading margin debts at record high. Okay, how could that be a good sign that people are levered to the hilt? Okay, in the market, and where are the sellers? Like a money manager at BlackRock or whoever, they don't see this as an opportunity to. I'm not saying get out of everything, but get out of something. No, you don't want to get out of anything. You only want to get out when we collapse. And that's what worries me, is the exit door. And
Well, yeah.
it's not going to happen today. It's not going to happen tomorrow. Whatever. Everyone says, oh, it's not today. It's not tomorrow. It's going to be one of these days. And what's scaring me is what happened to the guy right behind me there. That screen that he's looking at right now was black, literally black. We could not execute. So I'm afraid that I'm not going to be able to execute. And it wasn't us. We have high speed connections. It was the exchange that went down they called it, I don't know, maybe it's like a hurricane, a microburst of volume. And the screens went black. Okay. And that wasn't even a lot of volume. But I don't know if you remember, on Friday, like at 12:30, the market just whooshed down like 30 handles straight. Okay. The market can't handle that. And my screen went black. And then I think it was yesterday. Again, we had latency issues from the exchange. I'm worried because, a big, I was a big option guy at one point when I had my fund, massive. I probably was the top 20 biggest person in the business and options, for sure. Okay. And my positions are now dwarfed by like a retail trader sitting in his underwear with 250,000 in his account. He's controlling 10,000 options, you know, and he's in a chat room trying to pump up, some crazy stock that no one's ever heard of. I mean, the whole environment turns sideways. And again, I know we're talking a lot about it. We're just trying to keep people up with what we're seeing, and to be a little cautious. I'm not saying don't buy. I mean, I'm a little bit worried. It's funny. I'm going to get a little bit hedged on this position, but I had a little bit of downside put exposure in Nvidia overnight. And it was probably about 4% out of the money. The stock's up today, so I'm fine. But like last night, I'm like, holy cow, Nvidia could go down 10% in one day easily, easily. I don't, you know, the stock has bucked every trend and every bad news head. Like it ran $20 on doing deals in China, and then they didn't do deals in China, and it never went down. And then it had bad news on something else, never went down. So I was a little worried overnight, because that's a lot of risk overnight to have. And, we're going to take care of that on the opening. But, even including myself, I'm boxed into this false sense of security that the market gives you, that, hey, we're going up every day. And one time we're not going to go up. And, what happens? We haven't seen this in months and months and months and months, maybe since April, where you come in and the S&P is down 1% on the opening, or even 0.5%, like 40 handles, 50 handles. What are people going to do then? They're not going to, I mean, they've bought it every time, but they're not going to be able one of these times to be okay. So,
Yeah,
you know,
you can't. It's impossible to time. You don't know when it's going to happen, but when it's happening, you're going to know it because, like you said, I mean, look, liquidity is going to dry up, and everyone's rushing for the exits all at once, and that's when bad things will happen. But right now, at this moment, no one really seems to care. Which, I did want to talk about this move in gold really quick because maybe this down the road is the catalyst. But I mean, yeah, everyone's enamored with this move in gold, this move in silver. It's making new highs just like everything else. It's impossible not to not own something and not make money on it. Gold and silver is joining those trends, and so I feel like everyone's treating that like any other AI stock. They're in it for the gains. They're happy with the gains, but they're not thinking about what is this actually signaling. And I think part of it comes back to you've had a 10% at one point in the year. It's come up a little bit, but at one point in the year you've had a 10% decline in the U.S. dollar index, which is absolutely huge. Like the U.S. dollar is not a meme stock. All right, like the meme stock, can do that, can do 10% in a day, no problem. Like the U.S. dollar index is not a meme stock, and this is the worst return since the early '70s, and that should not be happening. And that's at the same. You have that. You have the rally in gold. You have all these things, a lot of things lining up to drive another, call it inflation wave. I think it's absolutely crazy that the Fed is they're cutting rates. They're going to cut rates again. They're pretty much cornered into it. That's what the market expects. I think it's absolutely insane that the Fed's cutting rates right here because 60% of the CPI basket's running over 3% right now. And the last time you had that rising to that level, that was heading into 2022, where CPI peaked out at 9%. And then you've got all these PMI indicators, these purchasing managers indexes. The ISM, they have one that's followed pretty closely, but like the Fed, a lot of these Fed districts, they have their own, and they're all showing the same thing. When you look under the hood of these things and you look at the prices paid component, so what's a manufacturer paying for raw materials, or what's a service provider paying for input prices, these things are all jumping through the roof. And they tend to have like a 3 to 6 month lead on what you see CPI actually doing, and like we're starting to enter that period from when did these things spike higher? Well, it was after April, it was after all the trade war headlines started erupting, and so
I
now we're
yeah,
coming up on it.
I just think that the numbers are very very, very off. I mean, as you've seen with the employment numbers, I think core CPI inflation is over 5%. I mean, that's what I'm thinking. I'm really, listen, we were like 9% a couple of years ago.
Right.
But I'm thinking it's much, much higher than what's being printed here. But the gold trade is taking on a life of its own, in the sense I was at dinner again with a bunch of guys that are wealthy and smart. And these guys were pumped up to buy gold. They're like, gold's going to 8,000, so everybody's running from one crazy thing into the next to make, you know, un listen, the stock market is designed over years and years and years to make you 6 to 7%, and it's probably less with drawdowns over periods. This has been an unbelievable cycle. So it's outside and it's created, you know, the Doberman, when you feed him, he wants more food. He's going to rip your heart out to get more food. And that's the market. But like, if you look at gold in its true being, it's an asset that doesn't pay you money to sit in it. It actually costs you money if you actually own the gold physical, because you have to store it, you have to protect it. Then, if you're buying GLD, you're buying an ETF where you're paying percentages, a load to the manager, and then there's slippage for what that manager is going to do. So you're not, I mean, you're in pure gold, I guess, but it's something called gamma in options. As it goes higher, they got to buy more. The assets get bigger. So they're buying more and more and more. And it's a pure return, but it's not 100% pure. And as you see, especially with leverage ETFs, they don't perform well at all. And this ETF probably is lagging gold by 6 to 10% on the actual spot price. So unless you're going to buy pure gold and put it in your house or whatever under your bed, you got to pay to store it. So, and your money's tied up and not getting interest. So it's, it's an unbelievable trade right now. But remember, again, we were talking at dinner. They're like, if the world, people are like at my dinner table talking about Armageddon in the world, and they're going to seize up. Like, the stock market's running like it's like
I was
it's
gonna
no
say,
tomorrow, and
if
these guys
you're
are talking about a world that's seizing up. I mean, where am I?
if your friend, yeah, if you're that's not the right reaction. If your friend is excited about the prospect of gold going to 8,000, that excitement should not be the reaction. If you think gold's going to 8,000, you should be like, oh crap, why is gold going to 8,000? Like,
Well, no one cares, Clint, because it's just another asset that they're buying. It's like they
yeah,
don't even know what gold really means or is. They don't know. They're not understanding an inflation hedge. They're not getting it. It's just this is gold has become the next meme. I mean, it's just a meme. They can move gold 100, 150, $200 in a day if they wanted to. But what I think is interesting, and I want to touch a little, and we're getting close to running out of time today. But how do these algorithms know? Like, I mean, I know they know because it's a mathematical formula, but they just plug in a mathematical formula to the Mag 7 index. And they're like, okay, today we're going to buy Amazon, we're going to sell Apple, we're going to buy, Netflix, or, one of these other stocks. And then it ends up being X weighting in the index. When are we going to have a day? Okay, where they're all down. And when we have that day, the Nasdaq's going to be down 1,000 because of the weightings are just so big.
well,
And
the weightings, but then the other thing that should concern investors in that scenario is that every all these firms running algorithms, they like to think they have their own little black box and that their algorithm's special and it's different. While a lot of them aren't. A lot of them are programmed the same way. So when one's deciding that it's time to head for the exits and it wants to withdraw liquidity, you can bet that all the others are doing the same thing or something similar to it.
yeah, so we'll wait and see. It's same. I feel like it's Groundhog Day every day. It's funny. I actually thought I mean, I thought yesterday if we went out near the lows, it would be, you know, it would have been an interesting trade, but somehow they saved the market. And then you come in and, market's up 8, 10 handles, not a lot, but it just doesn't go down. But today, if we happen to go down, which would be shocking and people would probably freak out, maybe we get an overnight trade that's very skittish. Again, I'm not expecting that, but I think if we close week today, for the first time ever, you may have overnight selling. And we have not seen that at all. I mean, at all, on volume. So again,
It's been hard. It's been hard to get a week close.
yeah. I mean, yesterday looked really bad in NASDAQ and then it stopped and rallied 40 points and then the seller left the building. I mean, it's interesting. But, as we're speaking, gold's ripping even another $15. So, gold could be up $100 today. I don't know why that's not concerning to anyone. You had Ray Dalio yesterday basically saying this is 1973, okay, which is not good, okay, and that you should have 20 to 30% of your assets in gold, which is ridiculous. I mean, does he think the US government is failing? I mean, I don't know. I mean, that's a bold amount and a bold call. And then Robert Rubin, who was the Secretary of the Treasury, okay, when the markets were real before all this shenanigans is happened in the market, I talked a little bit about him coming down the steps of the Treasury. Robert Rubin's one of the brightest guys that I know, and he was very, very disappointed in the administration, the closing of the government, which obviously no one is talking about. Which I don't know. Somehow Scott Benson said every week it's closed, it's 100 billion off of GDP. So I don't know. I mean, this doesn't seem like anybody's breaking down here, and they're going to take this to the mat. And that brings me to the further question. I know you're 100% certain the Fed is going to cut. I think the wager, especially if there's a 90+% chance of an ease, to go the other way, because I really believe if the Fed cuts rates with the government closed, it could be one of the most catastrophic mistakes in history, because the Fed has a dual mandate and they're data dependent. How could they make a determination without seeing a month's worth of data right before the Fed meeting? I know you're like, oh, they have to do it. They're locked in. And maybe they are, but okay, let me ask you a question. Let's say they're not, why does the Fed have to be so locked in? Like why can't the Fed and Paul Volcker, who was the chairman of the Fed in the 80s during, and the late 70s with massive inflation, would surprise the market, because by surprising the market, it gave the market the emphasis, okay, to rejigger what was going on. Like if you tell everyone what's happening, how are rates going to go lower? Everyone knows he's cutting a quarter, right? I mean, it
Well,
just
what's kind of weird is that you've got Rubin out, or no, or Dally, someone out warning that it's like 1973. Well, I
that
mean,
was Valley.
yeah. So back then, I think it was under Burns that the Fed made it worse. Like they increased the money supply, and that's what made inflation so bad. And it took Volcker, in the early 80s, jacking up the Fed funds rate to almost 20% to cause a recession and finally get it under control. It's funny that we're looking at rate cuts and like a dovish policy once again at the time when inflation looks like it's becoming a problem. It's they're set to repeat the same mistake. But I think I here's what I think the risk for investors is. I think near term the Fed's locked into a rate cut, but then the outlook from there gets really cloudy. And I think there's the move in the Qs, investor optimism, a lot of it's pinned on getting more rate cuts down the road. Well, if you look at where the 2-year Treasury yield's trading at right now, it would tell you that the bond market expects only 2 more rate cuts in total from here, including October. So after October, you get one more cut, and then you're done, and then that's it. And I think that's one risk right here is that you get October, people are giddy about that, but then all of a sudden you get a repricing from there
But
because
how do you get so giddy? Okay, so the beginning of the year they had 6 to 8 rate cuts for the year. Okay, then it goes to like two. Okay, and that's not bullish, right? That's not, like you're saying the rate cuts are bullish, but they got four less rate cuts than was originally planned. Okay, those rate cuts are a quarter point. Really, any real rate cut when they're doing it is a 50, the 25 is a throwaway. Like, when they're in heat, they're doing a full percent. When they're really moving rates, they're going 50 at a crack. This is a give me to say, hey, Trump, stop yelling at me. I can't, I did what you wanted. Okay. But what I'm not understanding is, what is the Fed not seeing? The Fed's not seeing what's going on here with inflation. Listen, whether you think I don't know what I'm talking about or whatever, there's no one that can look at this market and not think it's absolutely insane. Okay. And even the common man, the wealthy common man who I'm meeting for drinks or dinner, they laugh. I'm telling you, they were like laughing last night. They're like, this market is ridiculous. It doesn't even make sense. So, they're not selling. No one's selling because no one, listen, I watched Palantir go, okay, from 80 or 90 to 170, 180, back where it is now, back to 135, and people were freaking out. So all I'm saying is they still didn't sell. So like I said to my friend that's freaking out, I'm like, just sell your position. You're up 50, $60. No way. No way. I don't want to pay tax. No way. So I'm really worried. Forget buy the dip mentality. I'm really worried about the fact that we are going to have a correction at some point. Okay. I don't know when it's going to be. It could be today, it could be the end of the month, next month, whenever. It's coming. And what's going to happen? Is it going to get down? Is this correction going to get down 5%, 10%, 15? I don't know where it's going to go, but I can certainly tell you not one human being will sell a share of stock. Not one. I'm just telling you, not one. So that's what scares me. That keeps me up at night, as far as, what's going to happen. And I'm planning out, you know, how to handle this thing that's going to happen, which is just a natural correction with liquidity. How do we get, like I'm not even really short the market. Okay. And I want to be big time short. So my question is, how do I, like you said, you'll know. I think we may know, but I don't think we're going to get enough liquidity to get the positions on. And that's what worries me. That's what worries me. So maybe there's something called tail risk, where you just buy out of the money puts, buy them 2, 3 months out, spend a couple of dollars on them, and just have them just in case. And you know that's what I see. But we're running late, so I'm going to throw it to you. The level-headed mind, because I'm you know I'm just sitting here in awe of every day the market going up. So I'll throw it to you. I don't know if you have any
yeah,
ending thoughts.
two things I'm watching. One, I mentioned this the other day. I'm still watching if we can, the dollar's starting to strengthen. No one's really watching that right now. If the strengthening dollar can at least cause a near term reversal in some of the things that that have been benefiting from that, like gold. But gold obviously showing no signs of slowing this morning. One other idea maybe to just keep an eye on: Tesla recently heading its prior all time high. So that's a big time resistance level. It's been pulling back off of that. So I don't know. We traded calls there. I think it was last month when it was starting to break out. Had a dip back to the 50-day and bought calls, and it reversed higher when we're starting to see Tesla, some of the recent weakness, bring it back down to its 50-day again at a time when it was testing its prior high. So that might be something to watch there.
Yeah, I think it might have been the car announcement that they're making like a Model Y for like no
Yeah.
money. I don't know. Listen, the crazy thing about it is when we bought our position in Tesla for our subscribers, which worked out well. Should have stayed longer, but the stock was 300. It's now like 450. And this is like a month. Um, so these are the type of moves we're getting. This is the type of market we're in. But I would keep an eye on gold. It's gone crazy. I got to ask you this. What is the Fed doing? They're sitting there and going, I mean, gold is inflation. People don't realize that, but that's the measure of hyperinflation. And that's what we're seeing now is the fear. And listen, everyone watching this podcast knows this, okay? Whatever they say the CPI is or PPI is more producer, but on the CPI, it's much, much higher. My CPI is like 8%. So I don't know how we're getting 3. I don't know how the Fed's mandate is 2 on inflation and we're at above 3 and they're cutting rates. How,
Yep.
how is that? But anyway, listen, we're close to the opening, 9 minutes away. Basically same stuff. I wouldn't get aggressive today. I would definitely either liquidate some longs or get short if you're trading if we go negative. We're not going negative right now, but if we go negative, otherwise just sit in your longs and watch your stuff go higher. But just remember, have some downside just in case we have that liquidity event. And we'll be back to everybody tomorrow and enjoy the day.